Hey everybody, it's Michael from the Investments Lawyers, and today we're going to go over our process for setting up an investment fund or SPV. So let's dive right in here. It's a 10-step process. This is what we do with pretty much all of our clients, and it's divided up into 3 phases, as you'll see here. Phase 1, Phase 2, Phase 3, and each phase has its own steps. So let's go through them. Step 1 to forming a fund. You'll have to do some regulatory and tax analysis. Tax stuff, regulatory stuff, it's very important for starting a fund or an SPV. For example, on the tax side, you might have to do special structuring if you want to admit non-US investors or US investors who are tax exempt. So you'll definitely need to bring in a tax lawyer. As far as the securities side, there are 3 main laws that you're going to need to comply with. One is the Securities Act, the other one is the Investment Advisors Act, and the third one is the Investment Company Act. And whether these laws apply to you and what you'll have to do to comply will depend on your asset class, target fund size, and the types of investors that you're going to onboard. So step 1, regulatory and tax analysis, very, very important, something to do right at the beginning. Step 2 for how to set up an investment fund is the summary of terms. So we have this form, summary of terms. It's quite long. We'll send it to clients and we'll set up a call, a very long call. Sometimes it's 2 calls, sometimes it's 3 calls. It really depends. And we walk through this long summary of terms. And half of it is me explaining how investment funds work, and half of it is the client choosing what terms they want. So for example, what does the carried interest waterfall look like? Are there any fees? What are the fees? How long does the fund last? Is it open-ended? Is it closed-ended? All sorts of stuff. This is really the most important call. It really is the foundation for the rest of the process. So step 3 in forming an investment fund is the marketing deck. This is a little deck. It's like a PowerPoint or something of that nature, and it's what you will use to start marketing the fund. You know, it'll be pretty, you'll have some pictures, you might have projected returns. Definitely don't guarantee returns, don't do that, but you might project returns. And so we'll take a look at this for you to make sure it's okay from a regulatory perspective. Step 4, I gotta move my head here. Step 4 for forming an investment fund is to build out your team. So running a fund is complicated. There's lots of aspects about running a fund that you might not be familiar with. And so we can help you build out your team. Some common people, you might need an auditor if you have a bigger fund, or if you're required by a law to have an audit, which is the case in some states. A fund administrator is essentially an accountant who helps with fund matters. They'll help with capital calls, distributions, things like that. You'll want a bank, you'll probably want insurance. Some larger funds might use something called a placement agent, which is basically like a broker-dealer, and they go out and find investors for you in exchange for a fee, usually. And then you might want an LP onboarding service. Gone are the days where we send PDFs or physical paper back and forth to sign people up. There are lots of digital services that will do this now for you. So that is phase 1. I'll zoom out here so you can see everything nicely. That's phase 1. For us, it usually takes about a week. And after that, you have your summary of terms, you have your marketing deck, you're kind of ready to hit the ground running. For us, we usually take a break from our clients at this point, and they go off and fundraise. And once they have a critical mass of investors, we go into phase 2. So let's go into phase 2. It's called the heavy lifting. So step 5 to forming an investment fund is you're going to want to form the legal entities. You don't really have to do that in phase 1. We can wait until now in phase 2 to do it. And so we'll file paperwork with typically Delaware, some formation documents. Usually we'll have at least a fund, a general partner, and a management company. We have those all listed here. And like I said, they're usually in Delaware. In some cases, if up in here in the tax and regulatory section, we're going to need some special structuring, then we will have more entities here. For example, parallel funds, feeder funds, blockers, all sorts of that fun stuff, which is usually driven by regulatory or tax requirements. Step 6 for how to form an investment fund. We draft the principal fund documents. This is really, the biggest step, at least from a lawyer's perspective. We'll draft the documents. There's a limited partnership agreement, which is the main deal between the GP and the LPs. The subscription documents, which is a packet that investors fill out and sign to officially join the fund. There will be a big questionnaire where investors will answer a bunch of questions, and the answers to those questions are important to make sure that we can comply with tax requirements and the Securities, Investment Advisors, and Investment Company Act. So it's very important that you have good subscription documents. In some cases, you might have a management agreement between the management company, the fund, and the general partner, where the management company says, hey, I'll manage the fund in exchange for the management fee. And then in some cases, you might have a PPM. It stands for a private placement memorandum. And what this is it's really two documents smashed into one. The first half is a marketing document, which is basically the narrative version of your deck. It's like, hey, look at how great we are. This is our experience. We think this is a great opportunity. Halfway through the PPM, there's a personality shift, and suddenly it's like, risk factors. Investing is dangerous. You might lose all your money. There's tax things you need to worry about. Things like that. So it's really two documents in a way smashed up into one. Some clients decide they don't want a PPM. They want to save some money. If you don't have a PPM, the law firm will charge less money, or at least we will. And in that case, you can skip the marketing part, but the legal disclosure part, we need that somewhere. So if we don't have it in the PPM, we'll stick it at the end of the subscription documents instead. So sometimes, if you're lucky, you can skip straight from step 6 to step 8. But if not, we have to go to step 7. So step 7 to forming an investment fund, investor negotiations. So in step 6, you would send the documents out to investors. And sometimes the investors say, hey, that's good, I'll sign up. But sometimes they say, I'm interested, this looks like a good opportunity, but I don't like X, Y, and Z. So if you want to change X, Y, and Z, there are two main ways of doing so. First, you can amend the LPA for everybody. So what that means is, let's say you have a management fee of 2%, and this investor says, I want 1.5%. You could say, fine, the fee is now 1.5% for everybody. That's an option. The other option is to do what's called a side letter. And a side letter is a special deal where you give a special term to just one LP or a couple of LPs. So you say, hey, everybody else, the fee is 2, but for you, fancy LP, we'll give you 1.5%. So that has historically been pretty common. There have recently been some new rules that the SEC has put out, which aren't effective yet, but they will be soon. And basically, you can still have side letters for a lot of terms, but depending on the side letter term, you're going to have to show those side letters to other LPs. So it kind of makes side letters a bit more burdensome than they used to be. And these new laws that I'm talking about don't necessarily affect all funds. They mostly affect PE, venture, and hedge funds. It looks like they are not probably going to apply to real estate funds. We're going to see how this shakes out, but that's what it looks like at this point. Okay, so zooming out, we did phase 1, the kickoff. We did phase 2, the heavy lifting. The investors got their subscription documents and everything in phase 2, and now we're moving to phase 3. So step 8 for forming an investment fund. We sent out the subscription documents to the LPs, and they're going to send them back after they fill them out. The law firm should look at these subscription documents to make sure that the answers are okay, to make sure that we're complying with these 3 laws up here and some other laws as well, but those are the 3 main ones. So the law firm will review these subscription documents. They'll keep a list of all the important stuff that matters, and then we go to step 9. So step 9 to forming an investment fund. When you're ready to hold an initial closing, then we'll file a bunch of stuff. We'll file a Form D with the SEC. We will file what are called blue sky filings with the states where your investors are. And you'll sign everything all at once. You'll countersign the subdocs. You'll sign the LPA, the management agreement, some ancillary documents, things like closing resolutions and other fun things like that. And at that point, you've held an initial closing. You can start calling capital from LPs to make investments, and you have the show on the road. Now, one last thing to point out here is in a lot of funds, after the initial closing and you call capital, you can still fundraise for 12, maybe 18, maybe 24 months after that initial closing. So, you could hold a closing on July 1st, 2024, for example, and then start calling capital and making investments, but keep fundraising while making investments until July 1st, 2025, or maybe even December 2025. And that's a negotiated term in the fund documents. All right, cool. So thanks very much. Thanks for sticking with us through the 10 steps to forming an investment fund. Kind of outlines our process here at the Investments Lawyers. If you ever need anything in the investment funds world, please let me know. You can reach me at investmentslawyers.com. And yeah, thanks a lot. We'll see you at the next video.